What is our messaging around these storms and some other factors that are going on and in the world in our industry and how that is going to impact our fourth quarter and especially Q1 of 2025. So that was the topic of today's discussion. So this will be a good conversation. Um, Let me ask you first, Maciek, what is your overall feeling of us after this recovery from the storm and the messaging? What are you hearing out there?
Well, I have three listing clients. Okay. One of them decided to go temporarily off the market because they had slight water intrusion and they just want to repair everything
Yep.
along with a
Sure.
vacation in the middle of this. So literally we're taking 30 days off. Probably
Hmm.
going to come back right around Thanksgiving.
Okay.
If they hadn't had any damages, the conversation that we had was, maybe we should just take a step back, okay? Because we didn't get any showings before. I did an open house right before the storm. No one
Yep.
showed up. I've never had that happen before, and it
Right.
just wasn't. It wasn't great timing,
Sure.
very
I
well
agree.
priced home in what do you call it, a Southgate area too.
Oh
So it's
yeah.
well priced, and but it is what it is.
Sure.
The second client is not ready to list yet, but they were thankful that no damages happened because that would have extended their listing, and we're going to be listing in probably about 2 weeks or so before it's
Okay.
all ready to go. And they just want to sell. So they're motivated sellers. And there was no conversations, should we lower the price? Although yesterday, Raism released the new market report. I don't know if you
Hmm.
saw
No, I
that. I
didn't see
just
it.
check out my Facebook. I've made a little video about the
Okay.
quick stats on it. Uh, but it's our inventory is down, but our sales are down even more. Okay,
Okay.
so it's not looking good that way, but prices are holding up. So
Sure.
great. My third client flew to Africa, so I haven't been able to talk to him about it. But he wanted to list right after Thanksgiving a condo downtown,
Sure.
and but our conversations right before the hurricanes came is he did ask, "Do I think this is going to affect everything?" And I said, "It always affects us a little bit, but it's
Right.
not like a 20% price drop or anything silly, unless your property gets trashed." So overall, nothing catastrophic. All my buyers put the brakes on.
Okay. Gotcha. Gotcha.
It's a
Like,
lot of buyers, dude.
have you reached out to them and there's what are they saying? So it's like, what are you hearing from the buyers?
The buyers are, first of all, they're asking, is Siesta Key open? Are the beaches open? Like, what does
Hmm.
that look like and all that? And I say, no, not yet. They're working hard every day. I have a couple of videos on my YouTube channel about that,
Sure.
how they're going through it. But everyone is, first of all, the election too. It's more election related
Sure.
than hurricane related.
Yeah.
The conversations that I'm having, and people just think that rates are going to drop right after a president gets elected. You know, we'll see. But I did have a couple buyers that canceled their trips coming down. We had 2.5 months of bookings on Airbnb canceled.
Wow.
Yeah.
That's
So
big. Yep.
yeah, it's big. I mean,
Yeah.
St. Armand Circle's closed.
Yep. Yep. I
The
know. I
beaches are
know.
closed. So
Yeah,
yeah,
we had
it's dramatic.
a $4 million property out on St. Armands that got flooded. So 4 feet of water. And it's non-conforming, but it was completely like a two-bedroom, two-bath, kitchen, beautiful, gorgeous. So
Yeah.
hopefully that'll come back up in the next several months. But yeah, so I'm hearing some from you, I'm hearing there's some mostly it's people are putting on brakes. Is that right?
Yes.
What
Yes.
is your thought process with that? Like, what is your opinion based on your experience, based on your tenure in this business of where the rest of this year is going to go from a activity standpoint?
It's going to go dramatically down.
Okay.
I'm pretty pessimistic that nothing's going to change. Like
Okay.
rates, nothing's going to change to make it like, oh, good time to come in. But what will happen is off market. sales are going to happen that are distressed properties.
Yep.
Inventory in our next report that's going to talk about October's numbers,
Sure.
I'm
Yeah.
almost positive we're going to have a drastic decrease in inventory because it's measured on the last day of the month what our inventory is. I'm sure it's going to be drastic. Every insurance claim has to go temporarily off the market or something, right?
Of course. Yep.
Or cancel. A
Yeah.
lot of people. So I think we're going to have a decrease in sales, just like we did after Ian 2 years ago.
Hmm. Hmm.
Um, so it's not going to be positive. It's going to be a negative market report. Then we're going to have decrease in inventory, but I don't think our prices are going to go down because we're going to
Yeah.
have decrease in inventory,
Sure.
right?
Sure. Sure.
And then the snowbirds start coming at the end of November. So the month after that, so 2 months from now, 3 months from now, we're going to start having positive results
Yeah.
because we're coming to this really low dip. So we only have kind of up to go from there,
Okay. Yeah.
unless we have, in my opinion, a Democratic win, which tends to have a negative connotation of extending what's been happening in our economy. If we have a Republican win, then I think that's going to people are going to kind of rile up a little bit, and
Okay.
hopefully rates will fall and over the next year.
Sure. Sure.
I just said a lot there, but
No, no, no. It's good. And it's good to talk this through because our messaging and the reason I was asking you those questions like that is I was really inquiring into what your mindset is around the market and what
Mhm.
your thought tracks are with buyers. So if a buyer came to you today, Maciek, and is like, "Hey, is this a good time to be a buy like to buy, or should I wait till next year?" What do you say?
I'm going to say, what's your current situation? Are you renting? Are you making landlords rich, or are you going to, downsize or upgrade? What would you
We just
answer to
start.
that?
My answer to that is our lease ends by the end of the year.
Okay, in that case, I would definitely be looking. There's, how much are you paying? 2,500 a month?
Yep.
Good. Do you like $30,000 to stay in your pocket, or do you prefer it to go to someone like me, someone who owns numerous properties?
Oh gosh, no, I don't want you to have my money.
Right. And frankly, I would rather you own than rent. Okay. So basically, what we need to look at are where are the opportunities because you're probably afraid right now. And let me tell you, a lot of homes came off the market not because they sold, but because there's damage with them. But there's still plenty
Mhm.
available out there. So no, regardless of what the rates are, it doesn't matter. Just look at your payment. And I know that
Sure.
sounds like a car sales conversation, but look at your payment because in the future of you owning this home, which is probably going to be, 10 years, we're going to have rates fall. That's like almost a guarantee because there's in the next 10 years, there's three different presidents. So there's probably going to be something that happens. So I would stop renting. I always say stop renting no matter what the economy's doing.
Yeah.
Just
Okay.
just start
All right.
having your own equity and prices. We might be the other thing I say is, I don't know if you read about this, but we might have a hyperinflationary environment coming up. And it might be in about 5, 6 years, but that's when you really want to acquire property. Because
Okay.
if we do have rates come down, that will lead to inflation. And so that's a good thing now, right? Rates come down and you're happy. But in the long run, it's inflationary, which means that prices of homes are going to go up. So if you
Right.
don't take advantage of it, then you're going to be SOL on a
Hmm.
later conversation of oh, I regret not buying. So what do you think happened in 2020? Right? Rates came down. The Fed fund rate went down to zero, and your rates were 3%, and you didn't buy at that point in time for whatever reason. Don't miss the boat again. They're not going to go down to zero, but we might be in the fives. Like,
Hmm.
make sure to move on that because everyone else will too,
Yeah.
you know?
I like the line that Barbara Corcoran always says. She goes, "You got to get in the game. In real estate, you
Nice.
got to get in the game." She says that all the time. No, I like what you're saying. So, with in regards to these hurricanes, stuff like that, I'm talking as a buyer. Is this a good time to get a steal? I'm looking for a steal.
Can you define a steal? How many cents on the dollar?
I'm, looking to get something at maybe 70 cents on the dollar.
All right, 70 cents on the dollar. You're not going to find that on the MLS. This
Okay.
is going to be a wholesaler conversation. You're going to be buying directly from a wholesaler, which is a distressed property for some reason or another. Could be a major
Mhm.
code violation you might need to resolve and talk to the
Mhm.
county. Might be something, probably not a death, because usually those get listed. The
Mhm.
probates usually get listed, but it might be, shingles missing and you can't get insurance the day you buy it. You have to first
Yep.
replace your roof and then get insurance. If there's
Yep.
going to be an issue, you want 70 cents on the dollar, I'll find that for you. No problem.
Yeah.
But something for
Be
something.
prepared. Yeah,
Yeah,
exactly.
something for something. So are you afraid of major damage and are you afraid of big repairs of putting out 50, $60,000 of your cash into repairs?
Well, I don't have that. I'm an FHA buyer.
Okay, well then your options are limited, and it's not a bad thing. FHA has the best interest rates out there. Okay, so
Mhm.
it's not a bad thing. But being an FHA buyer, you're pretty much limited to what's on the market, or who do you know that's selling a house that's going to sell it to
Mhm.
you at 70 cents on the dollar,
Sure.
and most of the things that are 70 cents on the dollar that hit the MLS, first of all, they disappear. They get sold to cash buyers within 1 to 2 days, and the ones that don't aren't 70 cents on the dollar. Um,
Right.
but the ones that do, the cash buyers, they have problems. FHA has stricter guidelines for condition of the property. So
Sure.
you just won't get that. That's not how the industry works. That's all.
Right. Right. Understood. So, dude, good job, man. You are dialed in on your talk track. I really like it. I like how you're asking me questions too. You got to
Yeah,
keep
yeah,
keep asking those questions. So, just to go back, I have a different kind of a different, here's my take on where I feel the market's going. I
yeah.
would agree with just about everything that you said in regards to the election and the hurricanes and stuff. As someone that's been in this market for the past 20 years and that have been through numerous, elections and storms and all of that, what I'm getting the sense right now is that, for the remainder of this year, I think the market is going to be there's not going to be any major fluctuations. Of course, we have a lot of inventory off the market due to the storm. Eventually, that will be put back on and absorbed. But I think, we're not seeing any drastic price changes or anything right now. If you're a cash buyer, you're going to have a lot of opportunities right now. I believe that those off market, like you said, those expired or not expired, but canceled listings for one reason or another, that's where I would be looking for you if you were a cash buyer. But I have a different inclination for next year, and I believe it almost kind of goes back to the COVID, where COVID created a lot of pent up demand. Would you agree with this?
Absolutely.
A lot of pent up demand. Now, of course, what we've experienced this year in our market, and especially the past several weeks with the hurricanes, is this year a lot of people, I believe, have been on the fence due to the election and now with the storms. And I think there is what we're going to see in the first quarter of 2025 is I think we're going to see all of that pent up demand coming to fruition. Like it is, people are going to be getting off the fence and starting to make moves. So believe it or not, I'm actually very optimistic going into the first quarter of 2025. And again, we don't know how the election will know in a week or what is it, a week, 10 days? We'll
Yeah.
know very shortly. Yeah, we'll know very shortly. And I think we'll get some insights in our market after the election. I do believe that. But my gut instinct with this market and what I've seen and experienced in the past is I believe there's been a lot of pent up demand. And, the Fed's only had reduced the rate. It hasn't been that long. So people are still, wanting to make that move. We got hit by these hurricanes, natural disasters. For people that live in Florida, they're used to it. Guess what? They're going to have amnesia. They're going to forget about it in a month, except for the people that are on the Keys. So, is it going to stop people from moving to Florida? I do not believe so. I think there's going to be a high demand. And then overall, I look at our market compared to the national market, and we are still at an unprecedented um, uh, not enough housing. There's just not enough housing nationwide, and because of that fact, and that's not a problem that builders can solve or people can solve in a matter of years. We're talking about, we have a decade of of demand that we need to fill that inventory that we need to fill, and that's not going to be done shortly. So I believe from the economies of scale with supply and demand based on both our national and then our local insights, I think we're going to see a lot of pent-up demand making action and taking action, especially in the first quarter of 2025. And prices haven't necessarily changed. Of course, this year they've fluctuated in the downward motion, but I don't anticipate prices going down anymore. As a matter of fact, I anticipate prices remaining steady or even rising in the first quarter of 2025. That's my analysis. How do you feel about that?
I think you're just slightly premature. So
Okay.
I do think you're very much on track, but I don't think it's going to be in the first quarter. And the
Okay.
reason is that, first of all, let's just say Republicans win. It takes time for everything to happen, right? And even
Mhm.
though Trump mentioned that he's pretty much going to get a new Fed chairman if they lower rates in 2024, which they did. So Jerome Powell might be on the way out. And the president doesn't get to control the rates. The Fed
Correct.
chairman does, but he gets to control who is the Fed chairman. So
Right.
if Powell gets booted, which might happen, probably will happen if Trump wins, then
Yeah.
then I don't know if we're going to have, because FOMC meetings only happen every 2 months. I don't think we're going to have a rate cut right away,
Sure.
which is to me the catalyst for activity to start happening, right?
Correct.
If in the meantime we have one more hurricane in our area,
Like this year?
yeah,
Okay.
right. It's official hurricane season. I think ends in seven
End of,
days, or is
right.
it end of November?
I
Is it
think it's end of
October?
November. I
November?
think it's
Okay,
end
so
of
we still
November.
got 5 weeks, right? Where
Yeah.
something
Something like that.
could happen, but it could actually happen even later. It's just the waters are kind of cooler, so probably
Mhm.
not. But if we have another event, then I think that's going to definitely go into second quarter, right?
Yeah,
Because
I would
it'll be
agree.
fresher. The
Yep.
pain will be fresher.
Sure.
Also, once we start seeing the reports that Siesta Key is open and people come in and just blogging about it, posting about it, and all of that, I think that the people forget quickly,
I
right?
agree.
I
Yeah.
mean, look at any natural disaster anywhere in the nation,
Sure.
forest fires, whatever it is. People
Yeah.
forget quickly. They rebuild and they move on. But one thing that I haven't heard anyone talk about is from these natural disasters, being Siesta Key, Longboat Key, Lido Key,
Sure.
Casey Key, Minnesota Key. From the natural disasters, what do? Some people are desperate and they sell at a lot value because it's just not
Mhm.
worth it, right?
Sure.
1955 home needs to go.
Sure.
What does that do? That increases the price of everything, even though that comparable is low.
Mhm.
They rebuild a $4 million, $5 million home. So the barrier to entry into these, highly desired areas, it's going to be like a Miami thing, right?
Yeah.
Go to
Right.
Miami, be on a canal in Miami. First of
Sure.
all, the property taxes are more than my mortgage and property taxes per month, right? Like 5 times more. Property
Sure.
taxes are 80, $90,000 a year there for canal front homes. Not even like anything crazy nice, just an old crappy house,
Right.
right? So I think that's what's kind of going to happen is the cost of everything is going to go up because now it
Sure.
meets the building codes. It's a bigger house usually because we all like make everything bigger. We don't build smaller
Mhm.
houses, and it's
Mhm.
going to go up, up, and up. And it's going to become cost prohibitive to the working people. So I think we're going to have more conversations with luxury people over time, over the next decade,
I
basically,
agree.
you
I would
know?
agree with that. Now, you bring up another approach. One of our big struggles that I've noticed this year has been insurance, right? Insurance has been a big headache
Yeah.
on thorn in someone's side and our side. Now, in light of these storms, we're pretty positive in saying insurance rates are probably going to take another hike.
Yes.
So
Yes.
how do you feel that is going to be impacting, let's say, me as an FHA buyer?
Well, let me first of all throw you a curveball because
Okay.
right before our call here,
Yeah.
I here's my nationwide policy
Oh my
on
gosh.
my
Okay.
on my home. that I just scanned and filed, and I got a non-renewal on this, my home, right? Because I had an insurance claim from Ian,
Yeah.
and they non-renewed me after 8 years of being with Citizens through Nationwide. Well, notice of policy terms, we're renewing you November 8th for another year. I
Wow.
said, interesting. I said, let me call them because this it doesn't happen like that. It happens the other way.
Sure, sure.
So the agent that answered my call said, oh yeah, there's a moratorium in place where for
Wow.
no reason at all you be dropped right now until the end of November, and he might extend that. So
Jeez.
I just got renewed for $2,800 policy, which I'm so happy about because it should be way more than that, right?
Yeah.
um,
Right.
with Citizens, but whatever, I don't care.
Right.
I'm not a big fan of Citizens, but still, it is what it is. And I'm
Yep.
being renewed here for $200 more than last year, first of all, and second of all, I don't need to worry about my 4 point and win mid spending money that way and all of that. So there is a blessing in disguise that I happen to
Okay.
get on one
Sure.
property.
Right. Right.
Right? However, back to your question, how is the insurance thing going to play out? First we have condos versus homes.
Sure.
Condos, they're already getting. Well, you're recording this. They're already getting it, right?
Sure. Yeah.
From many, many, many ways.
Right.
Okay. From
Right.
many angles. They're going to
Yes.
get it way more because it's the policy, the condo owner's policy that's going to go up, even though it's contents only. It doesn't matter. It's still going to go up. And the building common elements insurance policy, which is within their COA dues, condo association dues. So they've already gotten screwed. January 1st, the new Senate Bill 154 is going into effect, into
Mhm.
law officially. Well,
Yeah.
it's already law, but it's going into effect of enforcement. It might get delayed, but either way, they're screwed. Okay,
Sure.
they're going to have price decreases or lawsuits. People are going to get together and do lawsuits against their condo association, which is going to prevent sales from
Right.
happening. That's going to be a spike down for pricing because some people just have to sell, right?
Sure. Sure.
But single family homes, which is what I buy, I don't buy condos, right? I'll get into investing of this stuff, and that's mostly what I sell. I think we're going to have probably a 20 to 30% increase again over the next 12 months because it's based on zip codes. Okay, it's
Hmm.
statistical probabilities. That's what insurance is all about. And
Sure.
these zip codes that we're in just caused them to have claims, so the probability just went up of a
Yep.
problem. And our car insurance, which no one's talking about, is going to go up again as well, right? My renewal went up in the last 2 years. My car, I have a Lexus RX 350, and it went from 670 to 1050, right? For
Jeez.
6 months,
Yeah.
for 6 months
Yeah.
policy. I'm sure it's going to go up again, and I have a perfect driving record,
Right.
so no
Right.
blemishes. So I think that we're going to get hit in so many ways, which might cause some people that are, how do I say, like workers, their employees, their admins, their whatever,
Yep.
they won't be able to afford it. They won't be able to afford to live here. Okay.
Hmm.
If they're renting, like, I don't know. It's not looking too good. So I think insurance is going to get hit really badly. 30% is pretty rough
Sure.
with that. And we're already number one. Florida's already number one for most expensive insurance premiums for homes, for dwellings.
Right.
And I think we're just going to have a larger gap between, I think New Mexico's number two,
Sure.
so I think it, it's not going to be good. What
Yeah.
do you think?
You know what? I think the insurance prices have put a lot of pressure on buyers. Again, it's all about the payment for buyers, right? It all comes down to the payment. That's how rates impact it. That's how insurance, that's how taxes and everything. I think it is going to be a little bit more difficult. But here's the like the silver lining to it is you still got to get in the game. Like you still can't be on the sidelines. You got to be in the game. It's going to be a bigger impact. What we're seeing with buyers, and I got new buyers I'm taking out this weekend. They are FHA buyers, and one of the biggest conversations we're having, especially in light of not just setting FHA alone to the side, is we got to find a house that has a lot of the major functional items of the home updated. That's for FHA, but also for any buyer right now, I'm looking at deferred costs for my buyers over the next 5 to 10 years. So if you get into a house that has, a 15-year-old roof, guess what? That's an old roof. Even a 10-year-old roof is an old roof,
Yeah.
according to insurance standards. So I think it is. I think what's so crazy about our market, and this is what I share with buyers, is that through the course of history and real estate, there's always been barriers to entry into the market. Pricing, insurance, taxes, all this kind of stuff, rates, everything. However, in the long term, does that stop people from still getting into the marketplace? And the answer is no. There
Yeah.
are still buyers, and in order to play the game, you have to get in the game. And that's why I advise is, even if it's not necessarily your perfect dream home, getting in the game and starting to build equity and at least get your footprint here in Sarasota, you will have that opportunity to move up. And so that's a lot of things that I say in regards to, how their what do I want to say? Their hesitancy in entering into the market because of this or this or this. It's always going to be that. It is always going to be that. The only exception right now is I'd probably say the election's a big one because the nation's so divided. And I believe since this is an election year, if you were to wait on the sidelines a little bit, maybe it would be after the election, then we would have a little bit more clarity. Would you agree with that?
Yes, definitely. And we're just around the corner from that,
Yep.
right?
Yep.
Like this
Absolutely.
is this is 7 days away. Okay.
Sure.
So
Sure.
that's about to be over. We're not
Yep.
your next call, we're not gonna have this conversation anymore.
I can't
But
believe, yeah.
I know, right? I know.
Right.
It's and I'm not happy how it's all divided. And I think a lot of
Sure.
people aren't as well. I know that
Mhm.
your stance in general from everything you've said today is more positive than mine is, right?
Mhm.
And that's great. But I think we actually agree on a
Yeah,
lot of
I do
stuff
too.
of what
I think
we're
we do agree
saying,
on a lot of stuff.
because regardless of it's positive or negative, stop renting.
Yeah,
Stop
I agree.
renting, people.
Sure.
Like, yeah, FHA is a great product. It's better to
Hmm.
get to go into FHA with a 1.75% MIP that you have to
Yep.
pay in, with a required for life of the loan PMI. Like, it's better for that. You're going to get a little better interest rate, so they give you a little something, but
Yeah.
not much, right? A quarter
And
point maybe.
low money down too.
Low money down,
Your
exactly.
cash in the bank. So
Exactly, and you never know your future. And my first home was an FHA. I'm so glad I did that. I have one FHA loan right now. I'm so glad I have that from about 8 years ago or so. You
sure,
know,
sure.
so I'm so glad, because 8 years ago, that property has appreciated a lot,
Yes.
a
Yes.
lot,
I'm sure it has. I'm
right?
sure it has.
So,
Yep.
and I think that's how it's going to go in 8 years from today. Your
Got it.
your buyers, I'm I am willing to bet with them, even if they pay full price, if not even over full price, to get some closing costs paid and realtor commissions paid,
Yep.
you're going to be on a much positive, numbers game on whatever property you pick in
Yeah.
8 years from now. I'm willing to bet $1,000 right now with those people.
Gotcha.
So
Gotcha.
so I think now is always a good time to buy. I hate to sound like a salesperson, but
Sure.
that's because of my experience with real estate.
Sure. Sure.
And if it's not in 8 years, it might be 9 years that it's
Hmm.
really good, right? Because we
Right.
had the great financial crisis, and
Hmm.
people that bought in 2007 recouped back in like 14, right?
Right.
It
Right.
was a while.
It was.
Um, but that's okay. That's what, 7 years,
Hmm.
right?
Yep.
So and now they're like way above, right?
Sure. Sure.
So I think it's always a good time to buy, regardless of politics, interest rates, whatever it is. But like you said, getting into that home where you can defer the maintenance.
Yes.
That's a strategy. That's all
It is
that
a
is.
strategy.
That's smart,
Yep.
right?
Yep.
So it might not be
Absolutely.
the street name that you want,
Sure.
you
Sure.
know?
Right. Yeah.
Maybe it won't be the right school district,
Sure.
but it'll save you money.
Right. Right. I got another curveball to throw at you.
Yeah.
Let's say I'm a buyer and I got substantial equity in my home. And would you say, in light of the storms and the light of our market right now, this would be a good time to pull some equity out of my house and buy a rental property or get into that rental game? If I've been thinking about the rental game for a long time, what would you say to that buyer?
So when you say pulling money out of your house, are you talking about a complete refinance or a home equity line of credit?
Just a home equity line of credit for a down
Okay.
payment on a rental property.
Okay. And do you know if your debt to income ratio will support having your primary loan, secondary loan, and an investment loan all together? Will that be supported?
It will be. Yes.
It will be. Okay. And if you were to answer no, I would say, well,
Yeah.
then we'd have to look into debt service coverage ratio loans
Right.
because those do not take into account your debt to income ratio.
Correct.
So either way, I would say it depends. How much money do you have? How
Let's
much is
say
your home worth?
let's say my home's worth 1.2 million and
Okay.
I owe still about 500. So I do, let's just say I have an equity line of three, 400,000.
Yeah, absolutely. I would say absolutely do it because the short term, you might every month you might be adding a little bit on the worst case scenario, but in
Sure.
the very soon term, like during the next president, whoever that will be, you're going to be profiting on that. Okay. Now, what I would guide you to do actually is I would guide you to take as little money out, like
Hmm.
use as little money out as possible to make a worthwhile investment. As an example, I have one of my friends, Sebastian. He he ended up having a refinance that he did. He needed to pull cash out, and he was left with 200,000. He took that 200, and we found a 6 unit in Bradenton for him. Now it came back on the market, and we had it under contract that same day because when you pick a good agent, they're on top of it for you. And
Sure.
I knew this property, and I was watching this property. Okay,
Sure.
we it came back on. And he purchased it with a 25% down plus closing costs, doing a DSCR loan. Now,
Hmm.
right now, this was just maybe a year ago. Right now,
Right.
he's profiting about $2,000 to $3,000 a month on it, profiting. So he
Wow.
can have 2 units vacant in order to break even,
To break
but
even.
he's not. All he's doing is that money that he borrowed from his HELOC, he's slowly paying that back with like 50% of his profits so
Sure.
that he keeps just like bringing that down and down and down, but he's keeping some money in the reserves over here, right, of
Sure.
the rental to make the numbers work. It's an aggressive thing, and it's not going to be like, once again, the perfect home that you're looking for to rent.
Hmm.
And the more units you can go into, the lower risk you're in. Now the more money you have to spend, and
Sure.
and I know that affects my commission, so I'm just being transparent. I know that I'm kind of like telling you that it's better to buy something more expensive, and you think it's all about me, but it's actually my 20 something years of being a landlord.
Hmm.
When you have 5 units, 4 units, whatever, you have one vacant, you don't have 100% loss of revenue, you have
Correct.
25% revenue loss for that
Right.
month, right? So it's actually a lower risk to spend more. So you
Sure.
got 300,000, 400,000. Let's look at something that might be about 800,000 and put a 250 down on it, maybe 300
Hmm.
down, and do a DSCR loan. And it's all about the numbers at the end of the day.
Sure.
Now,
Sure.
I can promise you one thing: it's not going to be the prettiest home, but it doesn't
Right.
mean everyone walking around got something to sell you on a bicycle. Okay, so it might not be
Right.
one of those neighborhoods.
Right.
You know,
Right. And what are they
that's
looking at for rates on a DSC loan right now?
Right now, you're going to get about 8%. It's about
8%
1% higher
higher
than
than.
a regular primary occupancy loan.
Got it. Got it.
And that's a 30-year fixed, all
Hmm.
right? That's a 30-year
Yeah.
fixed loan. So you can get a 6 unit, 8 unit, 30-year fixed rates, even though it's a commercial product. You can
Yeah.
still get that for
Yeah.
30-year fixed.
Sure. And especially for the people out there that are listening to this that are looking to get into the rental game, you got to get in. But I love how you
Yeah,
said the risk aversion strategies of going bigger is actually sometimes safer.
yeah.
Really smart, really smart.
Yeah.
Well, this
And
was,
also your speed
yeah,
of learning. You're going to have
yeah,
an accelerated speed of learning with 5 tenants than you would with one. Let me
correct.
let me just tell you from my own experience. It's just a matter of time before you file your first eviction. And
Yeah.
once you file it, your second one is a breeze. The
Yes.
second one is so easy, okay?
Yes.
Because you learn so much from the first one. Well, if you only got one tenant, that might be 10 years down the line. If you
Right.
got five
Right.
tenants in a
It's going to happen.
lower income, not low income, but lower income,
Lower.
working class type of neighborhood, you're going to have an eviction at some point sooner
Sure.
rather than later. So
Sure.
you not only do you lower your risk there, but you also heighten the probability of fail of success in the long run
In the long
because the
run.
lessons are learned faster.
Sure.
And then you
Sure.
talk to someone like me and you ask specifics. Sebastian calls me every month. We just check in. Hey, what happened? Did you have anyone not pay? Did you serve your 3 day? And I'm just kind of like, hey, dude, stay on top of it.
Yeah.
Stay
Right.
on top of it. This is your
Yeah.
business. You have to immediately enforce,
Hmm.
and be a dick. That's what it is. You might
Sure.
sometimes you have to be a dick, okay? And
Yep.
you care less when you have five tenants. Then if you have one tenant, you might get to know them well and things like that. And it's like an emotional thing. You have five tenants, you post a note on the door, you drive off, you're
Yeah.
done.
Yeah.
It's
Yeah.
over. It's like
I
that's
hear
what
you.
it is. So
Yeah. Well, man, this is an awesome conversation. I love having these talk tracks. And even for people that are on this call right now that will listen to this, I think we've touched base on a whole lot of different angles of what we're experiencing in our market. So
yeah,
I applaud you. I'm appreciative for you, especially with your experience. And then, of course, now bringing your extensive experience in the rental market as well.
yeah,
So
yeah. I love having these conversations too. I'm glad you're doing these
that's
calls,
awesome.
and I
Thanks.
show
Well,
up
it
every
feels
time I can.
that you're amazing. It feels good to be back. And man, you be safe, okay? And then I'll see
Thank
you
you,
next
sir.
Thursday. All right,
Yep,
sir.
I'll see you then. Thank you.
Take care. Bye.